Market breadth is a incredible tool to use in terms of gauging how strong or how weak a market rally is, or how strong or how weak a market sell-off is. Without strong market breadth, a rally can only sustain itself for so long, and the same thing goes for market sell-offs. So in this video, what I really want to do is go over the market breadth of what we're seeing right now in the stock market and why that's raising some red flags for me going forward. No, this isn't a world is coming to an end, the stock market's going to crash tomorrow. I'm not talking about any of that stuff. I'm just giving you, fair, unbiased opinions, which can be difficult to come by at times. But what I want to do is go over some of these charts here and just really give you my thoughts on what I'm seeing here and why there is some concern for perhaps a short-term pullback in the near term. One of the things that I'm watching for here on SPY, you can see over the last 8 trading sessions, we've essentially been in a sideways trading pattern here. What was the most interesting is that on Thursday, the day that NVIDIA earnings came out, we actually broke out to the upside at the open, but then we finished with a breakdown at the close. Now, what makes it even more frustrating, regardless if you're a bull or a bear, is the fact that the next day we popped right back into this trading range. And again, today, when we tried to break down and we tested the bottom end of the range, we popped right back up to finish green in the close. So it can be really hard to try to trade this market when you're just getting a lot of choppiness in such a tight price range. The other thing that I would want to point out is how weak the volume has been of late. When I zoom in here, you can see since the 20th, outside of the 2 days of selling, you've had extremely, extremely light volumes of level. I mean, we just barely crossed over 30 million today, and it took after hours trading to be able to do so. But for much of the day, we were trading at levels that were below what we saw on the day after Thanksgiving of 2023. So extremely light volumes here that we have to be worried about. And the reason why that is important is because light volume shows a lack of conviction. Now, it's easy for the market to rise on very light volume. It's much more difficult for the market to sell off on light volume. And that's because there's so much passive investing that's going on from 401ks and pensions and investment banks putting money into the markets continuously throughout the day that it gives a natural lift to it. So when the volume is light, that's a sign that there's really not any profit taking that's taken place. That's why every time you see an intraday pullback, it's usually on increased volume. Now, here's what's the most interesting thing to me of all, and that's the market breadth. Let's go to that chart. Now, here's where things get pretty interesting, because on the market breadth chart, you can see where you don't have a lot of strength among stocks. That means stocks like NVIDIA, which was up over 7% today, is carrying the water for the rest of the market. The market would not have been higher today if it wasn't for NVIDIA on the NASDAQ or the S&P 500. You take NVIDIA out, they're both trading in the red. So today, you can see where on the advancers, right here, you were sitting at around 950 stocks that were going higher. But on the declining side, you can see where you were sitting at over 1,780 stocks to the downside. That makes for some very difficult trading conditions where 2 stocks are going down for every 1 stock going up. But it's not just today. It's not just a flash in the pan. We've been seeing this market weakness for quite some time. But what makes today more interesting, it was actually on a day where equities were trading higher on the large cap side, but by and large, most of your stocks were trading lower. And that's the NVIDIA effect. Now, what I use to judge market breadth, I use it on Thinkorswim. I will use the $ ADVN for NYSE advancing issues. And for the decliners, I will use $DECN for declining issues. And what I want to do is I want to create a ratio there. So when I'm seeing 2 to 1 to the downside, but the market's up, that's telling me that there's a divergence there, that the market's not really showing as much strength under the surface as it might be portraying above the surface. So things are deteriorating underneath while things are looking kind of okay to the naked eye. Likewise, when I see market breadth where it's 2 to 1 in favor of advancing issues over declining issues, that's usually a good sign. That would have been a good sign for today, but that's not what we got. Or if you have a really strong rally where the market's rallying, 1 or 2% higher, and then you see market breadth of like 3 or 4 to 1 stocks going higher for every 1 going lower, that's a good sign. And likewise to the downside, if the market's selling off 4 to 1 to the downside, usually you're going to have a sell-off that's probably around 1 to 2%. But where it would become an issue for me is if the market was selling off 1 or 2% and you only had like maybe 15 stocks going down for every 13 going up. That would tell you that we're almost at break even there. The ratio is more like 1 to 1 or pretty close to 1 to 1. And that would tell me that there might be some big names that are selling off, but the whole market isn't following these big names to the downside and that there's a good chance for a market bounce. So wrapping it up, advancers and decliners, the number of the stocks that are going up versus the number of stocks that are going down is hugely important to determining the health of an intraday market rally. And then going forward, what you can expect from the market in terms of how strong market structure is underneath the surface versus what's being portrayed to you in the financial media or from the people on social media. So check out those two symbols, apply them to your own trading, and start figuring out how you can better understand what is going on underneath the surface of the stock market each and every day. If you enjoyed this video, I would encourage you to like and subscribe to my channel. Also, make sure to click that notifications button so that you can be notified at any time I make a new video. Plus, tell me down in the comments below, what are some of your favorite indicators that you use to be able to judge the market health of a stock market rally or sell-off as well. Thank you, and God bless.